From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, this is the COB. It's great to have your company this afternoon. I'm Kyle Rod. I'm with Danny Akuye, of course. And, well, Danny, it's been a pretty good day overall. I think we finished about 0.5% higher.
Absolutely, that's what I am looking at, about 0.48% or almost 35 points on the ASX 200. And what's that, 7 points on the CBO 200 or 0.5%. So I reckon we'll take that.
Indeed, and up above 7,300 for the benchmark index there. So all's well and starting to push into positive territory for the week too, or very close to it anyway. Let's get to some of the sectors that were moving the market today, and energy was the star performer. Some corporate news out, we'll get to that just in a minute, but well, some broad-based gains there. And so your beloved coal stocks pushing higher.
Indeed. I actually think, didn't the coal price rally yesterday or
I would
something?
imagine so. I mean, Coronado Global Resources was another that was sort of up the top of the market today as well. So Whitehaven, you can see their New Hope up by 4.4%, all quite strong today. But curiously, we did see some weakness coming through the miners, and it seemed to be just before midday that some of that selling took hold. I mean, no news I could find necessarily, but I mean, the narrative there is obviously potential weakness in China. So, I mean, perhaps reflecting a little bit of that.
Indeed. And I think the market is desperately waiting, or, you know, this is across the globe, it's not only here in Australia, for an update from the Politburo about what they are going to do in terms of really moving their economy along a bit. I know a lot of people say 5% growth is fine, but let's face it, you have export growth slowing, okay? Because we've got slowing, you know, global growth. That's not good for them. The consumer just keeps on really being quite conservative. So yeah, markets are looking towards the end of the next week to see if there is, I think, a package.
Indeed, and I think the PBOC might even meet this week as well.
Right.
Don't quote me on that. I think there was a decision on the loan prime rate. So we'll have to double check that, but you know, that's the monetary side of the things too. Obviously, the other arm of economic policy that will be important, at least for our miners. But let's get back to the positives, and the
Financials.
Banks also doing reasonably well there. And CBA, we were commenting on it a little earlier today.
Can I tell you something quite funny? I meant to tweet it. I haven't had a chance. Mm-hmm. I saw Morgan Stanley have upgraded the share price target from $82, I think, to $82.5.
Oh, really? For Commonwealth Bank?
And it's just a classic in terms of, unless it was a typo on Refinitiv, we'll find out tomorrow, no doubt, when we check some of the broker updates. But always with Commonwealth Bank, the broker price targets are so far below where the share price trades, and it usually never gets there.
Yeah, it's always an interesting one, actually.
We digress. Quality stock.
It's quality stock, and I think a way of just sort of trading the Australian economy too, because I remember when they reported at the start of the year, and everyone was, shock and awe, you know, the income's falling and the net interest margins were weaker, or, you know, forecasts for everyone knew that already. Yeah. It was really just, it trades rich. People use it as a bit of a proxy, and then, you know, these sorts of news stories bring it back to earth. But yeah, more complex than I think just the business itself, perhaps. But that's the areas of the market that were, again, moving today, which takes us nicely to our three themes, of course. And we'll be talking about it a little bit more in just a moment's time. But the confession session, that's what we're getting a lot of at the moment from companies. Production reports too, out of the miners, which are very important. China worries, I think, still is hanging over the market. Less so today in Australia, but certainly in the region, we're seeing some sluggishness in Asian equities or risk assets, I guess you could say. And then, well, US earnings beats. They set the bar low, but they're climbing over it, so that means something.
They're very, very good at setting expectations, one has to say. I mean, they are the kings at that. But I was listening to James Gorman talking about the Morgan Stanley results. And their capital adequacy ratio is so high there. So he really sold a good story, and the share price was up over 4%, I think, for Morgan Stanley. Bank of America also had good results, even though they're underwater with their Treasury bond holdings. But tomorrow, we will get to that, but it's the big T and the big N reporting Wednesday after the close in the US.
Oh, you'll be in your element. And
I will be.
James Gorman too, the most powerful Australian on Wall Street.
Yeah, I guess so.
It has to be.
There's also a hedge fund manager who's absolutely massive who flies under the radar.
Oh, really?
Yeah.
Oh, you got to know. You got to know them.
You've got to be
They're in the know. Okay, let's the three teams there. We did say that there was a bit of news today in terms of the corporate front. Woodside Energy reporting a 10% fall in second quarter revenue. But the share price was higher for the session.
All discounted. I feel.
Okay.
Yeah.
Move on. Rio Tinto reported a 1% drop in second quarter iron ore shipments. Also, that was exacerbated by a derailment in June, a train derailment in June. Iron ore prices remain pressured, although I think the guidance was actually towards the top end of the previous range. So nothing surprising there, nothing dire by any means either. And in fact, it was a day where most miners were down. It was one of the least bad performers, if you will. And then Northern Star Resources was an interesting one too, because as I understand it, a lot of folks were saying that the numbers or what was revealed there wasn't necessarily dreadful by any means, but we still have seen a fairly big drop in the share price today, down 5%.
Well, again, it all goes down to expectations. I guess we'll have to wait and see what the brokers say tomorrow. I do know a lot of the gold miners have been suffering from not only cost imposters, problems there, labour problems, but and also production. But I'm not, any the wiser on this one. And Ampol, interesting, because they reported a 54% drop in first half of refining margins at its Lytton refinery in Queensland. And they had a big long outage there, impacting on the price of its products. But again, market was quite relieved with the result, and that was up 5%, well, almost 5%.
Yeah, there you go. And that's how some of these companies did finish the day's trade. But, stock of the day, I suppose it wasn't any newsworthy sort of impetus there for this one. But Macquarie Group, before we crack on, do you like Macquarie?
I do, I hold it.
There you go. Okay, well, let's see what Carl Capelinga from Think Markets and Michael Wayne from Medallion Financial say about Macquarie Group.
However, on an improving outlook, looking out sort of FY 2024 and calendar year 2024, we think there's potential for Macquarie to start to resume a bit of an upward swing as some of those key business divisions, the outlook improves for them. Again, such as your capital markets, your trading business, your asset management business. We think there's prospects for those businesses to really start to be net contributors again to Macquarie's earnings on a broader scale than they have been in recent years. So we're optimistic on the outlook for Macquarie long term. But
so
in the short term,
you're buying around the 180?
Yeah. So in the short term, we're not expecting a huge amount, but on a more medium to longer term view, we're happy to buy Macquarie.
Look, I can see sort of more tailwinds than headwinds on the basis that I think equity markets, risk markets are going to be fairly buoyant over the next 12 to 18 months, and nobody knows the future, of course. The valuation is about fair. I mean, literally trading on a PE of 14, which is about the 5-year historical average. So nothing to see there. The chart is looking okay. It's looking quite fair. Plenty of support around that 170 to 165 level. As long as it stays above that, I think people who own Macquarie can certainly hold it. As for buying it, look, I'm a momentum buyer. I mean, you can see on the chart there, that's a great chart, actually. We'll leave that chart on screen. You can just see how flat it's been over the last 18 months. So I haven't seen a great deal of reason to be in Macquarie. If it starts to break above 195, I can certainly start to see the momentum coming back in. But until then, I'm happy holding.
Okay.
Happy holders there, perhaps, if you're in it. And, I guess Carl's waiting for an opportunity to buy, perhaps, if the momentum shifts.
But as Koshy picked him up on, I mean, if you look at the share price, it was a lot lower. It was 124 18 months ago and, over 180. So, let's just say, maybe a buy on weakness. But they didn't say that.
No.
Nor did I.
No, because we don't have a compliance department. If we did, they'd be slapping you on the wrist. But anyway, let's get to our guest for the next 10 minutes or so. And Will Symes from Macro Capital joins us. Will, great to have you here. I suppose you must just have your eyes glued to all these, production updates as well as, sort of the confession season updates as well.
Yeah, absolutely. I think it certainly is confession season. Companies trying to get ahead of their results coming out shortly and trying to avoid significant sell-offs upon actually releasing their results. And so I think we've certainly seen that out of a number of companies already in the last few days, I guess, really kicking off that earnings season. We obviously had an update from Rio ahead of their report on the 26th of July, I think it is. And that was actually, I think, a reasonably positive update, coming in with iron ore production towards the upper end of guidance for the calendar year 2023. That said, I think their alumina and copper volumes were a little bit lower. They cut the guidance there. I think one of the key things that we're going to be seeing as a bit of a thematic this reporting season is profits and revenues actually coming in a little bit lower. But as long as it's within that kind of guidance, things being relatively okay in terms of downside. And so I think with Rio, their revenues or profits meant to come in about 19% lower than the previous corresponding period, but still roughly in line with expectations.
Indeed. What about Woodside?
Yeah, I think Woodside's a bit of an interesting one. Their revenue obviously dropped significantly, down 29%. I think that's not a whole lot of surprise considering the significant supply cuts out of OPEC. But I think the thing with Woodside is that their overall production's actually kind of increased in line with the BHP spin-off and their kind of overall portfolio expanding. So I think things were actually down on the previous corresponding period, although on a yearly basis things were up. So I think the outlook for oil at the moment is actually looking a little bit more positive than it has done over the past 12 months or so. There's definitely been a bit of renewed optimism coming back into the oil price, particularly as Russia looks to be making good on those supply cuts.
Those were sort of, I guess, the stories at a grassroots or kind of micro level today, but it all seems to be sort of set up from the open, of course, when we had, Wall Street strong lead. A lot of that generated by strength in US earnings, I guess. So, I mean, what's the assessment there? Because it certainly seems to be supportive of sentiment at the moment.
Yeah, look, I think the sentiment out of the US has been quite positive, to be honest. I think the banks tend to be a pretty good barometer for the overall health of the economy. Morgan Stanley and Bank of America reported reasonably well, and it's a bit of a positive surprise there. I think the key tipping point will be some of the FANG stocks tonight, Netflix and Tesla. Obviously, the majority of the year-to-date gains on the US indices have been driven by those top 7 or so stocks on the S&P. And so I think if we see a negative miss there, we might be in for some significant downside. But again, if we see a positive beat, it's possible that the market keeps kicking on. And I think we're starting to see a little bit of optimism regarding AI being less of a fad and actually a bit of a positive thing with the Microsoft announcement overnight. As long as this whole AI what has been termed a fad can be cash flow accretive, then I think things should be all right on that front.
It's looking, I was reading about Ed Yardeni, who's been really positive on the market and actually correct. And he was just saying he's got some really positive upside targets, potentially 20% till the end of full year 24. But he did say he doesn't want it to see this melt up that's happening at the moment, because he just sort of feels like if it melts up, then it might melt down again, the risks rise. Do you think it's looking a little bit melty up at the moment?
Well, I think the top 7 stocks on the S&P are up around circa 60% year to date, which is obviously a huge rally. I do think we are seeing positive sentiment flow into the other 493 stocks on the S&P. Which are only up circa 5% or so. But I think generally when you have these market runs, a bit of a healthy consolidation period is necessary to head higher. So I wouldn't be disappointed to see a little bit of a consolidation and pull back at these levels.
Interesting. And day ahead as well, obviously all eyes on the jobs report. I guess that'll inform a little bit just in terms of what interest rates could do. Might be, I guess, a bit of a mover tomorrow.
Yeah, absolutely. Obviously the minutes out yesterday, I think we're largely in line with what was expected, to be honest. Still watching the impact on households and the potential need for additional rate rises. But I do think the employment figures tomorrow will be significant. If we get a second monthly kind of back-to-back jump, I think it may well reinforce the RBA's need to hike additionally after August. But I think if results come in line with expectations, which is around 15,000 jobs, then it might kind of abate the need for the RBA to continue raising as aggressively.
Indeed. Wow, that was great, Will.
Good. Thank you for having me.
Fantastic.
Will Symes there from Macquarie Capital. Thanks for your time. And we just got some news coming across your screen there. UK inflation slides to 7.9% in June, so below expectations, down from a month prior. So that's, well, we'll have to see the market reaction, but possibly a positive sign there for the UK economy and maybe for markets, obviously, as well.
Indeed, even core inflation was down from that 31-year high at 7.1% in May to 6.9% in June. So it's just interesting because the UK had been one of the outliers.
Yeah.
And so I think that's quite interesting because the trend, and the trend is your friend, is starting to look across the globe because CPI out of Canada was also lower than expected last night.
Yeah, okay. So we'll see if it is something that can continue, of course, and next week we'll have our own quarterly CPI release that, like we was talking about before, with the expectations around RBA, could feed into that as well, along with those jobs figures tomorrow. But let's get on to the leaders and laggards now. We've already discussed a couple of them, but here you go. Imugene, always volatile, up by 11%, tends to move with the market, and well, Thai beta sort of overshoots. BrainChip as well. I didn't see anything on BrainChip. That is a big move even for BrainChip, but I don't know. Someone said AI somewhere on a trading floor somewhere and they bought it. Coronado Global Resources, that's another coal name that we were talking about before. Again, a part of that sort of beloved portion of Danny's portfolio. And Ampol and... Danny doesn't like coal. She's not biting. Shh. She doesn't like coal.
Shush.
Sorry. Laggards now. Let's see what's on there. And Northern Star, we've spoken about the news again. Maybe a high bar, disappointment from investors there, despite a mixed bag of numbers there when it comes to its production update.
Lend-Lease and Ansell, still interesting.
Yeah.
There's a few brokers that have downgraded the price target for Ansell, which is really no surprise after that update there. That poor CEO, new CEO, he just is, having to literally clean out the cobwebs out of that company at the moment. Lend-Lease too, still being sold down after they're laying off 10% of their workforce. And Medibank Private off 2.5%.
What do you reckon for Ansell, the CEO? The gloves are off now? I'm the worst. Small cap leaders and laggards. Now we'll quickly peruse them. Anything that jump out. Drone Shield actually up by another 20%.
Wow.
So that was out with an update a couple of days ago.
They had that contract. They got the US contract.
That's right. Yeah. So there you go. It's
and Reece,
one of those
I don't know
companies
what's
that sort of
going
move
on
contract to contract. But when it gets them, it moves indeed, and it's up 20% still. Nothing on Reece?
No, nothing on Reece. Just was having a quick check to see. Oh, that's Reece Pharmaceutical. Wrong company. Good one, Danny. No, I don't know.
Let's get to the laggards in the small cap space now. Again, nothing out there that sort of...
your favourite Rumble Res.
Rumble Res, that was up there. It's a far more, a little less volatile than it used to be, perhaps. Those 2,000% moves, haven't happened recently. Okay, let's get on to what's happening overnight, because we spoke about that UK CPI data, which did drop all of 20 minutes ago. So that's cross that off the list. That's a risk that is no longer on the table. But US housing starts, also US building data out tonight as well. Important because there's actually a lot of resilience in the US housing market at the moment. Which is kind of curious.
It's an interesting one because people aren't selling their houses because they don't want to refinance their mortgages. The builders, there is a big shortage of new stock, and a lot of those builders like Lennar and everyone are actually offering discounted mortgage rates to move stock. So it's a bit of like Australia, there are shortages. Those housing stocks are well at 12 months, if not all-time highs, which is interesting. So it will be interesting to see what's going on there.
Yeah, definitely. A bit of second-tier data, but nevertheless, it all sort of feeds into one another. Let's get to this chart that I've brought up all week. And
Earnings whispers.
Keep pushing up as well. It's a great resource.
Woohoo!
Goldman Sachs as well, before the open. And, we'll wake up tomorrow morning, or basically wake up tomorrow morning to the Tesla and Netflix news, so it could be fascinating. You're a pretty big fan of Tesla, also a follower of Tesla. Anything we should be expecting in particular? Anything interesting?
I think it'll be margins. Just continue to be margins. Right. Everyone will be focusing on that with their price discounting. They obviously had good last quarterly sales numbers, but it'll all be in the margins with them.
Yeah, actually, I heard an interesting clip from Charlie Munger talking about why he likes BYD so much.
Yep.
And they've been able to increase their prices while Tesla's sort of cutting theirs. So sort of talking about the virtues of one over the other.
Recently.
I saw it on Twitter.
Yeah, I think that might be a bit old, but I could be wrong. Could be wrong.
Yeah, okay.
Yeah, he's made a fortune out of that.
BYD.
Yep.
Yeah. He's a funny guy. He's a clever guy, obviously. Day ahead tomorrow. Last but not least, we did speak about those jobs numbers out of Australia. A little bit of data actually. Those production reports: BHP, Evolution, Santos, also earnings from Zip and
Telix Pharmaceuticals.
Peter Gray, COO, who's very kind to the show, always tends to make time for us. Will be on tomorrow morning.
Well, that is exciting.
It will be. So we'll get straight from the horse's mouth there what's going on with Zip. And Telix is another stock often beloved by, well, those with slightly higher risk appetite, but certainly the retail crowd. So also watching that. But, well, plenty to look forward to. In the meantime, of course,
recap on the market.
We'll get a recap on the market.
Yeah, let's just have a quick look. So ASX 200 up almost 40 points, 7,323. So that's 0.55%. And just note the Aussie dollar's actually taken a bit of a tumble today, but you can do the SUBO 200 while I grab the Aussie.
No, it's, well, therefore to see up 0.52%. And I suppose if the Aussie dollar has taken something of a tumble,
it's almost, almost
that adds
off
weight to that kind of
half a percent
China story.
Yeah, so it's under 68, 67.82.
Interesting too, because we didn't bring it up before. New Zealand CPI data was a little stronger than expected this morning, and the Aussie always rallies in sympathy with the Kiwi. That was certainly very short-lived, and as you said, Aussie down by about 0.5% today. Again, screams of China, that kind of price action. But let's wrap things up there, shall we? Remember, you can catch up on all the news and interviews on our website and app. In the meantime, have a wonderful evening, and we will see you tomorrow morning.
Bye.